Thank you, Jay. And, of course, I want to thank Jay and I'm Third Media Studio. And also this podcast is brought to you by our premier sponsor is Jenna and her sister, Ilya, with White Chair Staging. They do amazing work in this market, and we're very fortunate to have them as a partner. A little more housekeeping. I also want to mention we're hosting an exclusive summer kickoff event on July 14th from 1 p.m. to 3:30 p.m. at the bar in Mill Creek. We'll be there to support Rescue Freedom International, who's a big advocate in the fight against human trafficking and exploitation. They're an incredible organization, and we want to get a bunch of people out there to support their cause and help them out as much as we can. And that's all I got. So without further ado, I'd like to welcome the James Daynard joining me today of Heaton Dainard. James, how you doing?
I'm doing well, man. How are you?
I'm great, man. I'm super appreciative that you could be here today and taking the time to join us. I kind of want to just I like to start by kind of, for the people who don't know who you are, I always love to jump in and kind of look at really how you got started in real estate. We'll take a few different paths along this journey, but really let's start there.
Yeah, it's been a while now. I always think it's like 10 years ago, but then I was talking to my business partner the other day, and I'm like, oh man, it's been 16 years.
Wow.
So how I got in real estate was actually kind of random. I was a senior in college. I was working at Red Robin, just trying to pay for college and stacking tips. And my business partner today, Will Heaton, he took a job with a local investment company in Kirkland, and where we were out finding off-market deals for this investment company. And he started doing it. He was out knocking doors. I was like, oh, what are you doing? He's like, oh, I go and knock on these doors. I talk to them and see if they want to sell to this company. And I actually didn't really have that much interest in that. Mm-hmm. But I wanted some sales training while I was a senior in college, because I was like, all right, I'm learning all the book studies. I'm a waiter, but I need to learn how to actually handle rejection a little better. Mm-hmm. And I can tell everybody, going out knocking on doors is the best way to get rejected. So I started doing that for a year. I was like, I'll just do it for a year, train myself, get into pharmaceuticals. And then I kind of fell in love with it I don't know how I fell in love with it. I had doors slammed in my face every day. I would go out. So basically what I would do is I would knock doors 2 days a week for 8 hours each day. And then I go work at Red Robin on the weekends and then go to college the rest of the time. And so it was just constantly busy, learning rejection. And then I just kind of fell in love with it. I saw people being successful. I started understanding the real estate, and then it just kind of took off from there.
So when you were in college, did you know that you were going to be real estate motivated, or was it more finance business at that time?
It was more, I've always had an interest in real estate. I bought my first piece of property at 18. Okay. It was just a piece of vacant land. I think I made $8,000 on it, which I was stoked about. But I always have a vast interest in investments in general. Like, I like math. I like numbers. I can go down the rabbit hole of any type of investment. But the one thing I like about real estate and investing is it's just I like that it's an asset-based backed asset, or your cash is backed by an asset.
Yep.
And so it was more about the business side and just learning how to become a professional salesperson and a business person. But then just with my kind of, I always had this interest in real estate. It just kind of grew into this massive thing. Mm-hmm.
So I have to go back. Falling in love with getting doors slammed in your face is kind of a unique character trait. Is that like something, is that innate? Is that upbringing? Is that just you were so motivated that you weren't going to let anything, you knew that you kind of needed to cut your teeth and learn, or where does that come from?
I'm very competitive, and I like to compete. I don't like, for me, if someone gives me a problem, I'm not going to go, oh, well, I got to move on. Mm-hmm. My first natural thing is, what's the solution to that? How to figure it out. So I think for me, it was more like a puzzle, and I was like, I'm so bad. I was the worst person in the office. Like, I was the youngest. I think the youngest guy below me was like 27 at the time. I was 21. I mean, I did not look like I was supposed to be there. And the fact that these guys were making money and getting deals done, but I was working 3 times as hard, did not sit well with me. So it was just this constant, like, okay, this door just got shut in my face. How do I keep it open just a little bit longer? Mm-hmm. And I think I started competing with myself. Like, all right, the last one took 4 seconds, so I just got to get to 7 seconds this next time. And it went from 7 seconds to 30 seconds. And it was more this like internal battle of not wanting to lose. Mm-hmm. And really, that's kind of what drove me. And then I started really falling in love with just, okay, well, how do I turn the situation around? Mm-hmm. And I would get this little rush, like, okay, I opened the door, or they opened the door and they screamed at me, and then within 5 minutes, we're all of a sudden having a nice conversation. Mm-hmm. And I would get like a little rush out of that, like, oh, okay, this is working. And I just kind of, I think it was the failure that kept me going forward. Mm-hmm. And I just didn't want to be the worst guy in the office. And that was, I just had to show the old guys how it was done.
So when did you and Will make that transition from like, I'm working at Red Robin, I'm door knocking, to we're going to do this on our own? What did that look like for you guys?
So that was an interesting transition. So when I graduated college, I quit my waiter job. I was like, all right, this is a crutch. This is giving me some money. I just need to do this full time. And so I quit that, started doing that full time. And we went from doing, Will was already doing it full time, getting some deals done. He became the manager at this company, and he had basically 6 guys like me out there. And so when I switched from part-time to full-time, it went from like doing maybe a deal a month to where I was doing 5 to 6 a month.
Okay.
And it was just, I had to train myself, educate myself, push myself forward. And then we started doing about 20 to 25 properties a month for this company. And then right before the market crashed, that company actually approached us and wanted to give us a different type of job. Mm-hmm. And so we are actually really happy with the company. We like the owners today. But they wanted us to essentially go sell franchises. Mm-hmm. And I was like, that's not really what I do. At this point, I was heavily invested in real estate, and I loved everything about it. Yep. And the business side kind of went away a little bit. I was like more into the real estate side. Mm-hmm. And so we talked to them, and then we just kind of did a transition. It was basically they gave us an option. We declined the option. And then luckily, we had a long meeting with them, parted on good ways. And we went out, got our own office, got our own set of sales guys. And then literally the month. So we had just signed the lease. Mm-hmm. We went to IKEA because we're on a budget too, right? Yep. We're sales guys. We saved up our money. We went to IKEA. Me and Will are building this furniture in a 300 square foot office, stacking it with sales desks. And all of a sudden we see the news article pop off like, oh, subprime mortgages is going away. Something's happening. And we were still pretty new in real estate and hadn't seen any kind of market correction. And then the market just, the month we opened our business, the market just fell apart. Like it collapsed. And that was where we were like, oh, we got to figure this out, because we had just spent basically all of our money getting our business set up. Mm-hmm. And at the same time, we had a lot of money trapped in deals that eventually went away with the market correction. And so we just kind of had to figure it out. But really with the transition, I probably would still be at that company today because I loved being there. But they gave me a different job, and we kind of moved on from there.
So what was it? I mean, obviously you figured it out, but kind of those first couple months when the market was tanking and you just opened brand new, was it an immediate pivot for you guys? Like the way that you were been doing things, all of a sudden you completely had to flip upside down to having a different model, or what did that look like for you guys?
That was definitely, it wasn't much of a pivot at the time because we were still pretty new in real. I mean, we had been in real estate about 3 years by then. We'd never seen a market correction, and we've never seen anything like that before, where there was no money out there to buy any kind of property. Yep. And at the same time, when you're trying to sell houses or investments, back then you could have a house for $1, and you'd be like, "Hey, I got this house. It's $1, just $1, and it could be worth $100." People were like, "I don't want that." It was like real estate had leprosy or something. Yep. It was, nobody wanted it. And so for us, it was really like, okay, well, we don't have a choice here. We got to either ride this out or go find new careers. I mean, I remember that first month, I was like, maybe pharmaceutical sales. I started looking into other things. I'm like, am I in the wrong spot? And then we just dedicated ourselves, and we just grinded. And it was a full time. I mean, we had guys still out knocking doors. But then you would get the deal, and no one wanted it. And so I would be cold calling people. But it was, I went from working more with, that was when I did transition, working more with sellers to working with investors. Okay. And it was like going out, meeting whoever was interested in real estate, talking to them, figuring out where their needs were, because a lot of people were still interested in it, but they couldn't get access to money. So we'd go source them the money and really package the whole thing up for them. And then that's kind of where the momentum started. The one good thing was everyone kind of quit during that time. And so there was this void in what we were doing. And that was probably the best thing that could have happened because we were really the only guys in the marketplace and we had to figure it out. And so we started, but we kept the same kind of business model, but it was definitely grind, keep lean. I think our overhead for that, like a month, our overhead was like $4,400.
Oh, that's not bad.
Like we had one assistant. I mean, commercial real estate was our lease was very cheap because they just wanted to lease anything.
Yep.
And that was the biggest thing was just staying lean. Stay lean till you figure it out. And then as you start figuring it out, you can kind of step your business up accordingly.
So I think that's a really good segue because now, I mean, where you guys have grown is pretty extraordinary. How did you figure out and navigate like how to put certain systems in and grow at a pace that wasn't too big, too fast when I know how competitive you are and you like looked at it like, oh, there's so many deals I can get my hands on, but maybe didn't have the infrastructure in place. What did that look like for you and Will?
Yeah, that was tough. Well, back then too, there were so many opportunities out there.
Right.
It was like, which one do you pick? But at the same time, we were still a little gun shy because so in 2006, I had lost all my savings. Like as a sales rep, I actually was saving my money, trying to reinvest it into housing and investments. And when you kind of get wiped out, you do learn a lesson. You're like, okay, I got to be a little bit cautious here. So we were definitely being cautious. But I think the biggest thing that we did to kind of get to that next step was really just figuring out, well, I come from a service background, right? I worked in waiters.
Yep.
I learned how to listen. I figured out what people's needs were. When I was working with sellers, I did the same thing because a lot of times it wasn't about that they knew they needed to sell their house or they should sell their house, but they didn't have a plan and a solution. So we created a plan for them, like, hey, we'll find you a new property. We'll help you with movers. Your property might be in bad shape and you have enough cash, we can go buy you a nice house. And so you create this solution. And so in the downturn, when there's all sorts of deals out there, we had to kind of narrow that box and we were basically looking for houses that fit into a box that hit all the solutions for investors.
Okay.
So instead of just looking for the best deal, we found one that would make it the easiest for someone to execute on. And by kind of repackaging it to where it made it less risky and less hard, it actually got people to buy rather than just the straight numbers. Whereas today we look at numbers. It's just like, hey, what's the return? We have the systems, we have the people, we know what we're doing, and we can kind of sell the numbers. But it was just a different type of market back then. So
fast forwarding to now, what does it look like? I know that I think you talked about you have 8 different arms of your business,
Yep.
and then a whole team that they all have their different strengths. Can you just shed some light on what that looks like for you guys?
Yeah, and that's that has been fundamentally important for us growing our business. For me, I see it all the time, and it happens with myself too. Like as an entrepreneur, you can start looking at all these different channels, and you're like, especially in real estate, there's vast ways to make money in real estate. You can do leasing, you can do apartments, you can do flips, you can do regular real estate. And so for us, because we always narrowed on a specialty, we never really branched off until we kind of figured out that specialty. Like we had that plan locked in, we had the systems kind of put together. So how it started is, we originally started, I wasn't even licensed as a broker. We would just do off-market deals.
Okay.
From there, we would have this off-market deal, and it was like, well, there's not very many good ones out there. How do we, and because the volume is down, how do we maximize this a little bit better? So we became like the good deal off-market guys.
Okay.
From there, that gives you kind of a little bit of a competitive edge. And then one thing that we did see is, or during that time too, there wasn't a lot of people buying, so we were actually active buyers too.
Okay.
So the downturn, because there was no buyers, we became them. We found a lender, got us financed, but then also what that taught me and Will was how to actually execute on these at a very high level in a bad market. And so based on that, we said, well, hey, we can actually make this plan and give it to an investor along with the service as long as they give us the listing, or they could pay us as a fee. And so it was basically like a second step to what we were already doing.
Okay.
And that's been, so all the 8 businesses that we have has always been a step off the other.
Okay.
And we've never jumped that step until we've mastered the other one. And so it went from off market to then we were brokers. And then because we got this reputation of helping investors, they wanted more inventory, and there's only so much off market to where we actually hired a sales team to just work with our clients to find on market deals. And I think there's a lot of actually misconception about us that we only get off-market properties. Majority of the homes that we buy are right on the market. And because we kind of built that reputation of knowing how to execute, like a lot of times investors, they're not just going for the deal. They want to mitigate their risk. They want to know the plan. A lot of people getting involved in real estate investing are pretty new, so they need some additional hand-holding. And so because we created that service and that additional help, that allowed us to then start selling people on-market properties. Because one of the things that investors like to do too is kind of negotiate commissions and get the numbers down. But if you're adding the value, it allowed us to start selling there. And then from there, because we had this inventory and this good client base, they have to pay cash for these properties because they need a lot of work, right? They're not traditionally financed. And we were basically just handing off our clients to this lending company so they could fund the deals to get the deal closed. And then that's when me and Will were talking one night. We're like, well, why don't we just become the bank?
Right.
And we brought in a partner. And so then it went from off-market, on-market properties. We put the plan together. We provide now the financing in between. And then we help them with the listing as part of the whole kind of coaching service.
Okay.
So it's always been a step after each other.
Okay.
Or, when we started flipping houses, we started flipping small ones. We did that. We probably did 100 of those. And then we got into bigger ones. And then from there, it went to development companies. So it's always been step after step. If I ever skip a step, usually there's a loss that's coming my way. It's that learning curve is so much bigger. And especially when you're trying to grow in a down economy, you can't really afford that big loss.
Right.
And so I think the economy did also help us kind of gradually do it because we wanted to be very conservative.
Yeah.
But it's, for us, we put the business plan together that helps facilitate our clients, that will give them the highest level of service. And as long as this is all one package, we can kind of structure it right that way. So it's like we find the deal, we'll help them fund it, we help them get it sold. So they're having a good experience all the way through. And also because we're providing the service, we do get revenue through 3 different ways of the transaction.
Okay. And I have to rewind a little bit because there was something you talked about before, that initial lender that you found. Was this the guy with the gold chain and not the greatest probably rate against your money?
No. So when we first, there was not a lot of money in the market, right? There was a few lenders. So like what we had to do, and that's fundamental for any investor. You're going to hit roadblocks. You got to come up with that solution or find a team that will help you with that solution. So because there was no money, we basically had to go to almost like a loan sharking type business. And yeah, we were paying, I remember probably our first 30 flips, we paid 3 points and 18% interest. But he really liked us and he was flexible with us. Like he would give us a little bit more leverage too because he liked us. I wanted to make sure I paid this guy back always. But we put that piece together. And then also, if we're giving our clients 18% money, that's kind of that. What that does is it makes it harder for us to find a deal because you got to factor in so much more cost. So when we created our business, it was 30% cheaper than the guy that we were working with at the time, and so it gave not only are we making revenue, our clients making more money too because they're now saving 30% of their cost. Okay. But yeah, he's I to this day though he helped us grow. Yeah. I still talk to him pretty regularly.
Oh, that's awesome.
No, he's a guy you always want to pay back, though.
Yeah. You want to be on time.
Yeah, you want to be on time.
I get it.
Yeah, don't be late.
So, I mean, it's pretty incredible kind of how you started and how everything's kind of come to fruition and where you are now. Let's kind of take a look at, especially for, people watching and people are going to rewatch this, investing in this current market. I do want to kind of preface, if anybody follows you on Instagram, they'll see that you're providing this wealth of knowledge and education and information. And kind of before we go into the investment part, I'd love to know, like, what's the inspiration like, behind that? Because I know a lot of brokers might want to keep stuff close to the vest or say, why are you giving this information for free? You could charge people to learn how to flip or learn how to invest or learn how to, the tax things. So what was there kind of an inspiration behind that, or where did that come from?
Well, for us, I think we've created a pretty good reputation with the investment community locally. And, one thing I've seen over the years is usually if someone gets into trouble on a deal, whether it's, and very rarely it's one of ours, but like outside, I mean, we do work with a lot of investors that will call us and say, hey, I got this house, I bought it. It's down to studs. I got to get rid of this. I'm in over my head, and we'll buy it off them. And really what it comes down to every time is the client wasn't quite educated enough on the actual real investment strategy and how to execute it. You can go on TV and you see these people, oh yeah, I bought this house, I did this remodel, got done on time, and look, I made this profit.
Yep.
It's amazing.
Yep.
It is way, way harder than that. It is a very high-risk business. And for us, for me as a salesperson, the best sales tip I ever learned was actually from my mom. She told me, I remember I was out trying to sell at the doors, and I'm like shadowing these guys that were a little bit more intense salespeople, and I was going nowhere. And I just remember going to her, and I'm like, hey, this job is terrible. I'm terrible at it. And she's like, well, and I'm telling her what I was doing. She's like, well, just be yourself. And part of being myself is making sure you're putting people in a good position. Educating a client, as a broker, I feel like I have a fundamental duty and a fiduciary duty to make sure I'm not selling something to somebody that doesn't know what they're doing.
Right.
Whether it's a good deal or not, they still have to be able to execute on it. And so a lot of times investors, if they're newer, they hear from a professional, they'll say, hey, it's this way, and they just go with it, and then they end up sometimes getting taken advantage of. And so it was a way to give back to the community and get a mass message out to just make sure people are making good decisions before they make an investment. You know, it's not all good in investing. You really, there's lots of hard lessons, and I've learned tons of them. And so for us, it's about, we want to tell people the bad side so they're educated, because also for us as a brokerage, we want to work with clients that are like-minded. They need to be investment based. We need to be in the same foxhole. We're on the same team. And so it was really about just getting a message out so people actually maybe they don't rush into that next investment. I mean, it's kind of like, the best example I have is like stock market. I'm not a stock trader. I'm not good at stocks. I've figured this out. The stock market, everyone's done really well in the stock market this year. I have not, right? But that's because I don't educate myself, and I'm just making decisions based on like what I'm seeing. And I kind of laughed at myself. I'm like, this is why I do this messaging, is to get the message out, help people educate, help them see the big picture, figure out what they need to learn, and then make the decision to buy that property. So it's really about just protecting people and making sure they know the full picture.
Right. So looking at, this market right now, and when you are investing, in deals, whether that be off market or on market, but let's just, for the sake of this, let's focus on market deals right now. Yep. Is there a sweet spot for you and your model, and I know that, I saw some content you gave on a key to getting market, to getting a deal on market. Can you share a little bit of that?
Yeah. So getting a deal right now is hard. Yeah. I mean, not only for an end user that's trying to find their home to move into, it's also hard for investors. And so what you have to do, you need to limit, as an investor, you need to take away contingencies. Like if a seller is going to work with you, they want to know that something's going to close, that you're going to do what you say you're going to do. And the best way to do that is to do all your due diligence up front so you can get the seller a very clean offer where they can make a quick decision. So what we do, and this is not recommended for everybody, like if you have bring a professional with you, but how we get so many on-market deals is we reduce contingencies. We can do that by, we work with Interest Funding, who's our lending company. Every offer we write is cash it is 100% approved. And not only that, we're putting up fairly good size earnest money to where if we don't close on that property, then the seller's going to keep the earnest money. And that's okay with us, because I'm a firm believer, if I don't do what I say I'm going to do, then I have to pay for that. Wow. And so how we get these deals is proof of funds, a lender that our interest funding can close in 72 hours. So someone can list a property and say, hey, your review offer's on Wednesday, I can have it closed by Tuesday. And depending on, and that could work well for that seller in that specific moment. And sometimes it's 90% of the time it doesn't, but that 10%, they might just say, I want a done deal. I'm already buying something else. I'm moving out of state. And they'll just maybe sign that offer around. And so it's really about being disciplined, and we literally, every property comes on market that has some sort of a discount, we analyze, look at, drive, underwrite, and then so by the time we're writing that offer, we're waiving inspection, we're showing proof of funds, we're showing a big earnest money that we are closing this deal, and then we are closing it quickly or whatever the seller wants to close at. So we really do whatever the seller wants to do, we're going to adjust to their time frame. If they want to leave all their stuff behind, we'll leave all this, we just account for it and then leave it all behind. So we try to make it easy on them.
Has that been something that you have you guys always operated like that, or has that been a product of the market that we're going through right now?
For the last 5 years, we've operated that way.
Okay.
The Seattle market has been elevated. It's growing. We have a lot of we have so much economic growth locally that it has been a leading market for the last 4 or 5 years. And so we've always been pretty competitive. And so I always say money talks. So we just make sure they know the money's there. The other thing that you can do, or that works really well for us to get in these deals, is communicate well with the brokers. Like, it blows my mind sometimes where I'll list a property and then no one calls me and I get an offer. I'm like, well, don't you want to talk about this a little bit? Like, talk to them, let them know you're for real, let them, find out what their needs are and adjust your offer accordingly. But good communication also. Like, the first thing I do as soon as a property hits market, I call the broker, I introduce myself, I introduce our company. If they don't know us, I educate what we do, and I'll even give them referrals to other brokers saying, hey, we just closed 3 deals with these brokers. Feel free to reach out with them. Let them know that we're very smooth on the transaction.
That's so smart. It's amazing what one phone call can do, right?
Because we're in a relationship business, and sometimes people think about, it's especially in the era of tech. Oh, you don't need to talk to anybody. You can just shove paper around. But at the end of the day, people want to talk. I mean, if someone just sends me an offer and I've never talked to them, I'm like, is this for real? Is it not for real? Because there is a lot of time wasters out there as well. So it's about just kind of getting yourself to the crop, the head of the crop.
That makes sense. So let's dive into the kind of the flipping side, which might be similar, might not. Again, I think I take in your content and I'm like, there's so much good education. I'm like, oh, I could do this. I just need capital and systems and more capital and more systems, and so it can seem kind of daunting. I'd love to know, I know that you are very analytically driven, and you guys do a ton of due diligence on the front end to prepare kind of for that back end stuff. But dive into right now in this market. What does the process look like for you from finding the right kind of off-market or on-market deal, and then turning it around to make sure that you are gonna get profit out of a flip?
Yeah, and that's there's kind of 3 parts of a flip. There's the buy and underwriting the potential value, and then there's the actual execution plan, and then there's also pricing it in the disposition plan, where like making sure that you're making sure it's presentable, everything's done right, that's marketed well. But in I think one misconception, well, it's not misconception because it is correct, but there's a and part, right? Yeah. Where people say real estate's always made on the buy. That is not always true, because including myself, I've bought some really good buys, but I bit off more than I could chew, and I didn't have that plan. And then because I didn't know what I was doing, the deal wasn't a good deal, right? And so I maybe overspent, I hired the wrong contractor. And so we focus so much on the execution side, and that is what is fundamentally important for every investor. No one can tell me my execution plan. They can give me the numbers. They can, a lot of people, like we have a lot of wholesalers send us deals, or brokers will send me a deal, and they'll say, hey, you can buy it for 500. We think it needs 100, and it's worth 750. I always appreciate them giving me that information because it's good information to look at. I get to see their perception, but I re-underwrite that deal all the way myself. I know what the price is. They've already told me that, which is the important part to buy. Yep. Is it a good buy? Now, the 100,000, that's up to my responsibility to make sure that works. And so what we use is before we buy anything, we put it in a full budget sheet. How do we create the budget sheet? We call our contractors and ask them what their pricing is. We don't just make up our number or make up this number. We use very factual numbers, so we call our electricians, like how much is a panel, how much is the wire, and we work it all backwards that way.
Okay.
And so as you're looking at these flip properties, I'll look at the price, then I put the plan, but then I'm also looking at what's the back end, because they may think, oh, you can sell this for $750 because it's the highest sale in the area. But maybe something sells for $699 and you only have to paint the house. And so that's up to me to figure out what the costs are to what the disposition is. And in flipping, if you don't have the resources and you don't have that team, you should not be buying that property.
Right.
Because the worst thing you can do is get into a deal, all of a sudden you're paying expensive interest because it was maybe you needed to get a rehab loan or a construction loan. And now you're trying to get the thing done while you're paying $100 to $200 a day for this house. And what it does is it adds this additional pressure onto you to get it done. and then you start making bad decisions and hiring the wrong people. And then once you hire the wrong people, you can be trapped with them for a little while too. And then you can't get them to finish, but they want more money, and it turns into this bleeding, this like constant bleeding of capital. But, do your due diligence. And if you're a new investor, what you want to do is, find someone that's doing it and shadow them, work with them, find a company that specializes in what you're looking to achieve, right? If someone's looking to do commercial leasing, they probably shouldn't call me because I don't do that.
Right.
But what I do is find value add properties and then and help them plan that out. And so that's where you just need to work with the right team. Not everybody's the same, right? Like I'm not going to, I call specialty brokers all the time because that's not what I do. I'll call them and I'm like, hey, this is what I'm looking for. Can you help me find it? Because that's their wheelhouse.
Yep.
But yeah, the flipping, it is a tough business. It is not what it seems like on TV. I always tell people that. Right now, it's pretty good because the market's just so crazy.
Yep.
But that doesn't mean I'm like executing or that much smarter. It's timing. At this point.
So when you're like mapping out a deal with especially cost of, not just like permitting, but a lot of raw materials are through the roof right now.
Yep.
Is that like an ever-changing sheet where, like at the beginning of the deal, you thought it was going to cost this much, and then 3 weeks in, some of those costs might change, and you have to kind of reevaluate, or what does that look like on your end?
Yeah, that's a very relevant question for right now. So typically what we do is we do update our price sheet every 60 to 90 days.
Okay.
Also, we have so many projects going on with our clients and ourselves. Like we get feedback from our clients, like, hey, how much are you paying for this? Or how much am I actually paying an invoice on my own for? And so we'll update our sheets accordingly from there. Right now, in times where we're seeing some pricing change, we add contingencies. So just in case it gets absorbed by there. But on the material costs, especially framing right now. Wood, there's a townhome site that we're building right now. We built 6 units. 6 months ago, we framed it. Our framing's triple. It went from being $98,000 for this site to $170 on the site that's the exact same type of site within a quarter mile of the other site.
Wow.
And so, yes, what you have to do, the step isn't just going, oh, I'm going to lose money or this is bad. You have to then you need to reevaluate that asset. Okay, what do I need to do to hit that next upper echelon of pricing, or what finishes can I cut back on and maybe adjust my pricing level down, right? Because there's always a sweet spot. Just because you buy a flip property doesn't mean you need to do it all.
Right.
And that's a misconception people have. Like, well, it's a flip property, it's all redone. No. Like, if you're a buyer in the market and you're looking at flip properties, that doesn't mean that investor did everything to that property. They did what they wanted to do to achieve this price.
Right.
And that, so those are two different things at that point. Now, when you're building new homes, you are doing everything. It's all warranted. But then you can start selecting different types of specs. So, what Will did on a recent thing when COVID hit, we were a little worried about the market coming down. So instead of reducing our budget, we actually increased our budget to make our product stand out even more, because that's a lesson we learned in the first market crash.
Right.
Part of what we did then is we would just make them, we'd price them at the same as everything, and then we'd add an additional $5,000 in tinsel with tile, appliances, and we would just stand out. And so we used to sell those properties in an average of 35 days. Average market time was 6.5 months at that point. And so we kind of went to that same theme of okay, if you're going over budget, maybe you need to shift your whole plan around and just go for that exit higher price. Or we had one in Ballard recently. We bought this house for 1.2. We were going to put $300 into it, or $250 into it, and sell it for $199. Then we got stuck in 18 months worth of permit problems. That's 18 months of problems, 18 months of costs, and construction was increasing the whole time. And so what we did is we did see some custom homes then starting to hit that $3 million range. And so we went from instead of doing the opposite and going, we need to figure out cost cut down, we went from $250 budget to $650. And then we just shifted the whole plan around. We ended up doing more framework. We ended up digging down the basement a little bit to get more head height in these certain areas, because that's where the metrics told us to do. So anytime you're flipping a house, you should comp your house every 30 days.
Okay.
Our broker team runs comparable analysis every 30 days for our clients.
Okay.
Because let's say they're doing a 2-bath house, and all of a sudden a 3-bath house sells for $50,000 higher, and they're still in framing. We want to tell them, hey, spend the extra 10 to get this bath in, because you're going to get it back.
Right.
So just stay on top of those values, and then also stay on top of your budgets. and your contractor. If you have any kind of time and material, you need to know those costs. And you need to know that a lot of people wait to find out they're over until the very end. Because they're like, oh man, I thought I was spending 100 and turned to 140. Yeah. It's like, well, that's your mistake as an investor. You should be tracking this and then changing things around.
Right. So I have to ask, on some of the properties you show, like they are disgusting. Like you had one that you're walking through, you're covering your face from the mold. Yeah. And it just, to the naked eye, or to a lot of people, even probably some brokers, they would look at that as a tear down. What goes into your process where you look at something like that and you go, it's not actually a tear down, and we can renovate this?
Yeah, those I buy a lot of those. The big misconception is that we always get the best. We buy the deals no one wants half the time. Yeah. At least me and Will do.
Yeah.
Our clients are a little bit less than that, but it really comes down to math. It's always just math for me, because for every house, whether it's in bad condition or good condition, there's always a price that's going to work for the seller and for yourself, or at least for me. So I know I can fix any house. It just takes money. And as long as I know what the costs are, and also it takes money and time. So you got to account for the holding costs and the rehab costs. And then the bigger the fixture, the better the margin you want, because it's a lot more work and your capital's trapped up for a lot longer. So what we always do is, what's the buy price? How much will it cost to fix it? What's the value on the back end? That gives us one number. And then we look at the same number, and we go, okay, well, we know it costs us roughly $250 a square foot to build a house. What's the exit? And then we figure out where the math is in between there. Then we go, okay, how long is the flip going to take us? So if it's a 9-month deal, and let's say we're going to make $50,000 in 9 months, and then we're going to build a new home and we're going to make $100,000, but it's going to take 18 months. That might not be the right call. Well, it would be the right call because we're making triple at that point.
Right.
But let's say we're only going to make 75 and we're making 25 grand more, then the cash on cash return actually goes down. And so usually what we're looking at is, hey, just what's your hard cost, what's the profit, and then what's your cash on cash return.
Okay.
But we do buy a lot of houses where people say they're not fixable. They are. Everything's fixable. Like there's no foundation. Okay, then you call a foundation company and you have it bid out. And for me, I do like those projects. The one thing I don't like is the permitting time takes forever. I mean, I've spent between 3 projects recently. I hired this awesome architect firm just to help push things through. We're still, it should take, I got an email from the city today saying it should take 2 weeks, but it's taking 6. We're at 6 months. 6 weeks is not even close at this point. And so, and we spent a ton of money on these guys. Like, I think I spent 50 grand on plans for these, and they're still getting jammed up. And so, I almost forgot where I was going with this, but it's all about what your cash on cash return and how to kind of spin it there. And then, is it worth the headache?
Right.
If I'm buying a huge fixture, yes, there needs to be profit in it.
Yeah.
It is not easy. And because people will say, oh, you got this great deal. I'm like, do you know how much work that was? You buy that house. And at the same time, you're also, when you're buying a major fixture, you're also exposed to market conditions for a long period of time, right? Like if we're in a time right now where it could be a little dicey, and I'm trapped in a permit and construction costs are high, and all of a sudden the market comes down, I'm going to, we went from making money to losing money.
Right.
And so there's lots of different variances in there. But bigger the project, the bigger the profit should be.
Does the competitive nature also play a factor into those homes that so many people would look at as you can't do anything with it, and there's part of you that's like, I know I can do something with that? For sure.
I like it when people say you can't do that. I'm like, okay, well, we'll see. But I have learned there's some ones I just stay away from now. Yeah. It's not worth. Well, if I could get them half the price of what I could buy them for, then maybe I'd look at it. But it's not worth the headache.
Yep.
It's just, it eats up a lot of your time. It mentally will drain you.
Right.
Like, I mean, when you wake up in the morning and you have 40 text messages from tradesmen, planners, permit people, and they're all giving you 40 bad news. Usually the bad news starts in the morning.
Yep.
It's not the best way you want to wake up.
Yep.
And so I have put a leash on that a little bit. I don't. So now we try to do ones that aren't going to be like a year-long permit mess.
Okay.
It's just not worth the headache.
Okay. So in one of your posts, you talked about 5 ways to lose money in real estate, and it was buying what you don't know, not verifying deal source info, falling in love with your own deal, incorrect asset valuation, and then over leveraging. out of those 5, is there one that is like the most prominent to you, where it's like if I was to focus on any of those, I would really like, whether it's falling in love or overextending? Is there any one of those that really stand out?
Those are all really important. And I've lost money on every one of those. I would say, yes, the biggest thing that you can do as an investor is you need to verify your own information.
Okay.
It's, because I do see people like, oh, I got this deal from this company and they said it was worth this and I need to put this into it. Mm-hmm. Well, that's fine that they said that, but what can you actually do? Right. And a lot of times people will just buy that thing because it's on a piece of paper, but it's your responsibility to verify all this. Mm-hmm. And so really you need to make sure that the numbers that are presented work for you. Mm-hmm. And if you don't verify those things, you're going to get yourself in hot water. Right. We're in over leverage. I almost brought up, because over leverage is what got me the most trouble in 2006. Yeah. Okay. I'm very low leverage nowadays. I just don't like it. It gives me anxiety. We use it on short term, but it's, because investors, a lot of people out there too, they're like, there's so much money out there. Yeah. They want to take it and spend it. And just because you have money doesn't mean you should spend it. You need to spend it on the right thing. Yeah. And so, don't over leverage, because if there is any slowdown, that's where you're going to really not enjoy life. Mm-hmm. You're stuck to your payments at that point. Yeah. But yeah, verify. All right. It's up to you.
So that's kind of a segue to the last thing I wanted to go over with you, which is, and we know that nobody can see into the future, but looking at, what you and I talked about before about, potential inflation coming eventually, and some sort of recorrect in the market where there's just so many pockets across the country that just continue to rise. When you and Will are looking at pouring into analytics and looking at, market data and trends, it seems like along the way you've kind of pivoted a little bit, from the very beginning to, buyers to sellers, and then the flipping side of it. For you, what does that look like if you were to, if let's say inflation in 6 months hit really hard, how would you pivot? Would you just navigate it? What does that look like? And maybe that's a loaded question that you can't even answer.
Yeah, that would be a new trend for me. Uh-huh. I can't tell you. I've been reading a lot on the 70s and 80s. Yeah. That's also a different type of inflation at that time, because they did a currency change, basically the backing, they took away the gold standard. Yeah. We dumped a lot of money in the market. Yep. So right now we are being cautious, and we're being cautious on all fronts. The hard part is because things are going so well, people get deal FOMO, right? Including last March when the stock market tumbled. Yeah. Every investor I knew was very nervous. Yeah. People were bailing out of deals. I actually bought 2 because my clients just said, they called me, they're like, I cannot close this property. And we just stepped up and bought it. Uh-huh. Which turned out was a good thing. Yeah. I was a little nervous. But no matter what, real estate goes up and down. Mm-hmm. Or not just real estate, all investing. Right. And if you are investing in anything, you should understand, you have to understand that. Mm-hmm. And so what you do is you just need to hedge against it and put in extra precaution, extra layers. And so what we're doing is, like inflation right now. Well, inflation could keep pricing going up, right? And so if we don't adjust accordingly on our evaluation, we also might not get any deals for our clients, and then our clients aren't getting their needs met. Mm-hmm. So we have to kind of run things right on the analytics. So things that we do to kind of hedge against inflation right now is we add contingencies to all of our construction budgets. We started doing that even before the inflation started ticking, because of COVID. There was a lot of backlog of materials, which was also causing price increases. Yeah. And so we add at least a 10% contingency to our numbers when we're looking at things. Okay. Now we call our contractors pretty much every month to find out the new pricing. Okay. Because we have to kind of know those costs. Also, what we do is we double check them, because they're seeing it as an opportunity to get higher pricing. So again, we're, like I was saying, verify. Then we verify all the material costs. What has gone up? What hasn't gone up? So if someone tells me a high bid and they said materials are up, I'm like, no, they're the same. Or if my framer does, I'm like, yeah, you're right. This is expensive. Mm-hmm. So in times of inflation, you just want to be cautious because there is good things about real estate. I mean, right now, if you were buying flip properties the last 12 months, you did very well.
Yep.
And so then again, we don't know if that's going to continue for 12 months as well, too. Mm-hmm. There is so much capital in the market, it could go for another 6 to 12 months because it's going to take some time to burn out. But you don't want to get trapped in the middle.
Yep.
And so how you get trapped in the middle is you stick to your core items that you like. Right now, I am buying houses that I really like. I believe in the neighborhood no matter what. Mm-hmm. I'm not going into areas that aren't, like some of my clients, let's say they're North Tacoma guys. North Tacoma is a great market.
Yeah.
And they're really good at that market. I'm not as good at executing in that market, right? They can get their costs done a little bit cheaper than me. So I'm only buying stuff that I know I'm really, really good at executing. And so we're adding contingencies to our budget. We're buying stuff in neighborhoods that we know are a little bit stronger, that we know how to execute on the plan. I'm staying away from like 12-month permit jobs because, at the end of 12 months, if this shifts and then I'm finally getting my building permit, that's going to be a problem. Mm-hmm. And so we're trying to shrink our exposure on properties. And then also what we're doing is a good way to do it is I run doomsday situations on every deal. Okay, if the market comes down 10% rapidly, which would be a huge drop, what is the math going to look like at that point? Mm-hmm. And as long as I see all those different outcomes, I can then make an educated solution on whether the risk is worth it.
Okay.
Or, not educated solution, educated decision.
Yeah.
Saying, hey, is this worth the risk or not?
Yep.
And if I don't really like the risk, there is a price that I will like the risk at, and then I just adjust my price accordingly.
Okay.
But yeah, the inflation, it's going to be a new thing, right? We're seeing it in building costs. We're seeing it in housing costs. Mm-hmm. A lot of what we've done too is switch our strategy in the types of assets we're buying. There has been some opportunity in multifamily recently because people don't want to be landlords after this. Yeah. Landlords have they've had a rough COVID run. Yeah. And so the thing we like about is, okay, well, we can buy this asset, whether it goes up or down, that's okay. Like if you're going into holdings, as long as your rent numbers are correct and you're not going off overinflated rents, that building can go down 20% in value, and I'm still going to be fine because I plan on keeping it for 10 years anyways. Yep. And real estate runs 10 to 15-year cycles. Yep. And so, just try to look at the long term rather than just the short, and then don't get deal FOMO right now. Mm-hmm. Like if you get FOMO, you're going to be getting yourself into hot water. Yep. There's always a next thing you can look at.
Mm-hmm. No, that's such great information. So I'm sure I could sit here and pick your brain all day. I'd love to just end with kind of what does Jimmy Daynard look like when he's not doing deals? I know your week is a lot different than a lot of people's with kind of your commute. Yep. And then what do you like to do when you're not working?
I mean, I love working. That's the biggest problem I have is I just love working. Yeah. I like competing. And so I really genuinely, there's a lot of things about work that get stressful, but it's at the end of the day, I do enjoy it. But outside of it, I'm big on fitness. I like, I'm a firm believer you got to keep your body healthy with your mind. Mm-hmm. And I just feel better. And then if I have free time, I try to spend with my kids. Yep. That is always top priority. Like, hey, weekends are for my kids. Yes, we're doing things with other people, but that's usually the priority. When I get a little bit of a break from them, I'm all Seahawks, and I travel to a lot of Seahawks games. Okay. I like checking out the different cities. I like walking through all the areas and checking out. I'm like, oh, what's up with this city? Where's the value at? Exploring, and then go and watch the Seahawks win. And then and I'm big boating. I love boats.
That's right.
If boating is like the one place I go where my brain takes it down 5 notches because I'm constantly. I probably need to slow down off the energy drinks, but it's constantly going forward, and so it's a place I can kind of relax at.
Nice. Yeah, I love that. And then, do you want to talk about the Bigger Pockets podcast at all?
Well, yeah. So, right now we're doing Bigger Pockets free live. It's on Facebook Live. It's where we're giving free education. Bigger Pockets is a great way. For people who don't know, it's a free website for people to learn about real estate. And the reason I got so attracted to them originally is I was on their podcast. I think it was like episode 388. And we talked about it, and I knew about it and had listened to it, but then I started listening to it more, and the amount of free education that's out there for people to really make good decisions, I started pushing it everywhere, and I've been trying to get involved. So I'm wrapping up my last series. We're probably going to have another one going forward. That's this Friday at I think it's 6 p.m. Eastern Standard Time.
Okay.
And I talk about construction.
Okay.
But yeah, it should be cool. So lots of free education.
Yeah.
So everything we're trying to do is just get the message out there for people. I do have a passion to see people do well.
Yeah.
And the more educated are, the better they're going to do.
Man, I love it.
Yeah.
Well, James, thank you so much for your time. This was awesome. It was super educational, and I really appreciate you coming out. We want to thank Jay with I'm Third Media. We want to thank Jenna, our sponsor, with White Chair Staging, and then I'll get you out to the event on July 14th out here in Mill Creek.
I will be there. And thanks for having me on. This is amazing.
Awesome.
So, yeah.
Thank you, sir.
Cool. Thank
All right.
you.
Bye.
Bye.